Ticker VYM is one of the most popular retirement ETFs because it has a solid dividend yield and some solid growth. Now, I like VYM, but can it keep up with SCHD, with ticker DIVO? Well, that's what we're going to find out in today's video. We're going to invest $10,000 into ticker VYM and project how much money you would make 10, 20, 30 years down the line to see if this fund is a good retirement ETF. Now, Vanguard's super popular, so I'm sure you guys have heard of this one, so let's get right into it. But don't forget, if you're interested in dividends, in ETFs, in making money in the stock market, don't forget to like the video and to subscribe so you never miss future updates. Thank you guys. Let's roll that intro. The Vanguard High Dividend Yield Index Fund ETF. It's down 1.45% year to date, which is pretty decent. At one point, it was in the lows of 114, 115 from the highs of 135. So you could have bought in at a pretty nice price and gotten a good dividend yield. It's starting to climb back up now, which I'm not surprised about. If we zoom out, we see the 1 year, it's still up 5%. 5 years, it is up 70, almost 70%, and max, it is up 150%, which underperforms some of the other ETFs. But remember, this thing was really popular right before a crazy market downturn where it fell all the way to $23 and has since then traded all the way back up to well over $100. And the key factor with this is the dividend compounding, which is why I think VYM has some really good potential to keep up with the other big names in dividend compounding. So we're going to check out the website and see exactly what VYM has to offer. Vanguard High Dividend Yield ETF. A lot of things I like about this one, particularly the expense ratio of only 0.06%. There's not a lot that are lower than that. I mean, DIVO, which has a great dividend yield of 5.5%, it's a 0.5% expense ratio. So a big jump there. Now, I always recommend checking out the website, see if you're interested in this ETF. The portfolio composition is key. They have 589 stocks, mostly mixed with large value over growth and over small. So really, really interesting how they have all this set up. I like that it has such a large amount of stocks because diversification, right? So you can go through, track all the history, track the performance, but there's a couple key things we need to talk about to see if this fund is really the ultimate retirement ETF. And first, that is dividend history. One thing with VYM that stands out is it's got a really solid dividend history. Now, if you're typically a dividend investor, this might worry you a little bit that the amount changes vastly, but you never know how the companies in this ETF are going to pay out. So it's not a bad sign necessarily if the dividend is lower one week than the next. Like you would see with a dividend king, that would probably freak you out. But we can track all the way back to 2006 when it first started paying out dividends, and it was in the 17.5-cent range, and it bounced around up to the 40s, back down to the 30s, and now we've seen it continue to climb, which is phenomenal because we want that CAGR, or compound annual growth rate, to continue increasing. So we've seen it come all the way up well over $1 now and fall back down into the 85-cent range, which I am happy with. It is an expensive stock to hold, $125 per share to only get, let's see, 85 cents a quarter is not phenomenal, but you have growth as well. And that's why this might be the ultimate retirement ETF. So we're going to check out the dividend growth scale, and it'll actually tell us how it has performed, which we can see it ranges. We've seen it go as high as 7% in yield when the price dropped a lot to where it's sitting now, which is 2.76%. And the CAGR, I mean, we'll go to the dividend scorecard. We can see all this data. It's only paying out $3.70 every single year. And the dividend yield and dividend growth rate are lower, around 3% for the yield and 8% for the dividend growth rate, which is the trailing 12 months. That's what we're going to use for our calculation for 10K invested. So all in all, it's pretty solid. It's not a home run, but it's consistent. And that's what a lot of people in retirement are looking for. And that's why I think VYM stands a good chance against some of the other very popular ETFs. The returns are phenomenal with our DRIP calculator and VYM. So we can see with dividends reinvested, your average annual total return is just under 13%. Considering the stock market typically returns 8 to 12% a year, that is outperforming the market, which is absolutely phenomenal. And that's a key factor that I look for with what I purchase in my retirement account. Now we can see your 10K investment would end up being $373,000, an insane 3,600% return over a 30-year period. So yes, it's a long period of time, but those returns are insane. Next, we can also see that our total return with dividends not reinvested is only 1,400, almost 1,500%. And your average annual total return goes down to 9.71%, meaning you would definitely make more money had you had DRIP on since the inception of the fund. And the ending investment is half of what it would be if you had had DRIP on. Still very solid with growth and some insane dividends paid out, but it's not really close. Dividend reinvestment seems to be the key for this ETF, which I am pumped about because I love dividend reinvestment. Now for the fun part, where you're going to do our calculation for VYM and see how much money this would make us in a long period of time. So here's what I've plugged in. We have VYM selected, DRIP is on, and it pays out quarterly, just like VYM does. We have just under 80 shares. We have no annual contribution, meaning we're starting with 10K and that's it. We're not adding any more and we're not being taxed because I invest primarily in a retirement account that is tax exempt. And so I'm not factoring in taxes. It's kind of hard to do because every person's story is different and taxes are different depending on income and such. So we're not factoring that in. If you know your tax rate, factor it in yourself, I would say. The initial annual dividend yield is 3.05% with an expected annual dividend amount increase per year of 8%, which is that CAGR that we pulled from Seeking Alpha. Now, we have seen a price appreciation of 7.8% on average since 2006. That's where I pulled that number from. So in 1 year, we can see the growth is slow, but again, you have to be slow and steady with these ETFs. Ending balance, your 10K initially becomes $11,088. And you were paid out $305 for that 1 year. Let's see what 5 years gets us. After 5 years, your $11,000 is just under $17,000. And now we've received a little under $2,000 in dividends. But again, we have to let those dividends compound and grow. Let's zoom in one more here. So our annual dividend, we can actually see $522 moving forward, which is very solid. You're not going to necessarily retire on that, but $500 a year in dividends is good. Kicking it up to 10 years, we really start to see things start to move here. Our $16,000 becomes $28,000. We're almost to a 200% return, and we're still averaging annually about an 11% return, which is, again, lower than we've seen so far with dividends reinvested. We have now made $5,000 in dividends, and we're getting $900 a year in dividends, which again, we're not just going to retire on the dividends for this fund because they're just a little bit too low. A 3% return or 3% dividend is not going to cut it, I would say, unless you have a bunch of money. But the key factor with this is if you held it for 10 years, 20 years, 30 years, and you only invested 10K, could you at least have a good chunk of change after? So after 20 years, your 10K becomes $80,000, an absolute insane 700% return, and it's only going to get better from here. We've now received $20,000 in dividends, which is $1,000 a year, very, very solid. And moving forward, our annual dividend income now is going to be $2,500 every single year. We're going to go all the way up to 30, and I like to use the same analogy where let's say you're 30 and you want to retire at 60. So you invest your $10,000 into VYM. How do the returns do? Are we anywhere near retirement? And let's see. Our $10,000 becomes $227,000. Absolutely insane. 2,000 plus total return in percentage. And our dividends paid out over those years is $62,500, more than what some people make in a full year. Annual dividend income is now $7,400, which means we're probably not going to be able to retire on that, but it's still very, very solid. We're going to go one more time up to 40. Let's say you're 20, you want to retire at 60, and you've put 10K into your Roth IRA, and thus VYM is what you selected. How much money are we going to have after 40 years? Our 10K becomes, drum roll, $650,000. Absolutely phenomenal. Now, I know 10K to retire on long term is going to be hard to find something like ETF wise because growth and dividends, they're phenomenal, but 10K is not a lot of money to retire on. So being able to turn 10K into $650,000 for 6,400% return, absolutely phenomenal. We've also been paid out $168,000 in dividends, and our annual dividend income moving forward is $21,000. So can you retire on VYM? 100%. The returns are there, the dividends are there, the growth is there, but can you retire only $10,000? Probably not. Either way, though, I'm very impressed by the results of this ETF, and I hope you guys are as well. If you want me to do more videos like this, again, don't forget to like and subscribe and comment the tickers down below that you think I should make a video about this on. Another key thing as well is if you enjoyed this video, I bet you're going to enjoy these videos popping up right now on Devo and SCHD. Check those out and let me know what you guys think. They're also some phenomenal dividend ETFs. Thank you guys so much for watching, and I hope to see you in the next video.